Could you imagine taking a simple concept idea, getting a raw piece of land, and turning it into a $7 million plus landscape hotel? And then not only doing that, but then going into a 28-unit landscape hotel, all from short-term rentals when you first started. That's what our guest Ben Wolff did, and we're going to dive into his story today, from short-term rental host to one of the most successful landscape hotel owners in the country. Welcome back to another episode of BiggerStays. We have Ben Wolff, who is the co-founder of StayOnera and StayOasi. We are here to introduce him to the audience about some of the amazing things he has built. Ben, welcome to the channel, and thanks for joining us.
Thanks for having me on, Garrett.
I appreciate it a lot. I've seen your sites all over social media for the past couple of years. I've seen numerous content creators. I've seen them on some of the highest, viral listings that when you're looking online for which ones actually stand out. So I want you to just dive in a little bit about what your origin story was and what even sparked this vision for Onera.
I was in the short-term rental world, Airbnb world, even before Onera, but I was really in cookie cutter sort of traditional Airbnbs. And look, we were making good money doing that for a while pre-COVID. Most of the properties and markets we were in were cities. So they did really well before COVID, before regulation got really draconian and they started kind of clamping down more in cities. We were, making great money. At our height, we had 200 units under management right before COVID. And then that really kind of upended things. And I'm grateful that it did because it really pushed me into starting to look for land and create this treehouse hotel landscape resort that became the first Onera location. And there was a sort of a perfect storm of factors, right? COVID hit. I had just gotten off a 6-week road trip with my wife for our honeymoon, and we hit like a dozen national parks all across the Southwest in about 6 weeks, and just had this amazing experience, waking up to these incredible sunrises and overlooking mesas and hoodoos and canyons and all these things. But we were traveling around in an RV, and there was a lot of friction associated with RV life. So, we had a compartment break on this when we were driving on the highway, and like my boots flew out and we had to go and try and recon find them, right? I mean, we had another instance where there was this component, basically like the diesel filter was broken. And so it forced the RV into, I forget what it's called, but it's some mode where you can't go above like 15 miles an hour. So we're doing that for like 4 hours on end to get to the next dealership. Like all of that kind of stuff really pushed me with Onera to say, how do I create more of a frictionless experience? How do I make it higher end? And thankfully, that was also where the big gap was in the market. There was AutoCamp, there was Under Canvas, right? These kind of more mid-tier, I would say, operations. Under Canvas doesn't even have temperature control, right? It's just a tent. AutoCamp, I mean, you're in this like 180 square foot, very small space with, the Airstream. And so my thought was, how do we level up? How do we do something more inspiring, more unique, more exciting, and all the comforts of home and then some? And that's really what led to the Onera concept, and it went from there.
Nice. Yeah. And we'll get into the unique, tree houses and all types of structures that you're building in a little bit. But I wanted to just kind of break down what made you choose Fredericksburg, Texas. So I know about Fredericksburg, and you obviously, we're from Texas, but from somebody that's not in Texas, what was it about that market that appealed to you that maybe some others in different parts of the country can analyze different things to see if this may be an option for them in an area nearby them?
First, I want to talk about the fact that I was living in Austin. I had just moved to Austin, and I think it is so essential for your first development project, especially ground up. You need to be somewhat local, right? You can't live, a 3-hour plane ride away. You're just not going to be there enough. I mean, if you have this incredible construction partner and you already know that ahead of time, maybe. But I think you need to be at most a couple hours away, maybe 3. And Fredericksburg was only an hour and a half. And so it allowed me to be very hands-on, often on site, involved in, very influential decisions to the site, to the ultimate resort, to the units. I was there for a lot of those decisions, which I think is crucial in your first product and in your learning to create that first kind of, experiential resort. So it was close by. And so I was looking for areas around Austin that were showing some signal that it could be a good market. So I have a bit of maybe contrarian view on this, that I don't want a lot of comps. If there's a lot of comps, then I'm probably late, right? That's kind of how I look at it. If there's a handful of comps and they're very compelling, I'm really excited, right? If there's one, then I'm pretty nervous. But if there's a handful, then I'm feeling pretty good. And that's what I saw in Fredericksburg. It's also what I saw in Wimberley. I was looking at this metric that I now call revenue per square foot. So I knew that I wanted to do these very unique, maybe elevated treehouse style units, something that was going to be, very inspiring to folks and pop off the page on Airbnb. That led me to, okay, these are going to be expensive to build. Where can I get the most bang for my buck in terms of revenue for like a smaller, very unique, elevated, cool design unit? And I found a couple of these, tree houses, quotes, air quotes, if you will, in Fredericksburg that were really just cabins next to trees that were kind of cool designs, and they were calling them tree houses, and they had these amazing reviews. Like nobody was hammering for the fact that like they weren't really tree houses at all. And so those units were doing anywhere from $100,000 to $150,000 a year for like a little couple's stay, right? I mean, call it maybe 300 at most 400 square feet, not big. And so that got me excited. Like, wow, these units are doing about 3 to 4x what some more kind of run of the mill cabins of similar size are doing. So that was signal to me that there's people coming to this market that are willing to pay. There just is not enough supply of like a cool, unique product, especially when it came to couples and sort of, smaller, more romantic style getaways. So that's what really pushed me in that direction.
And when you were envisioning, these elaborate tree houses and just extremely unique structures that you've built, I think one thing that may hold some people back when they see this is maybe like, how do you get these permitted? How do you work with somebody that actually understands this? How did you go about that process to, handle all of that, the red tape and the construction, possibilities that may, come out there from it?
Yeah, I mean, it's largely finding people that have done it before me, right? I mean, that was a big piece of it. The first builder we had at OUTEARN Fredericksburg Phase 1 was basically a treehouse builder. So he had done this before. I had seen his other designs. It was actually the biggest project I think he had done to date with his firm, and ended up having some growing pains and challenges with that. I actually decided to hire less of a treehouse specialist, but more of a commercial GC with a bigger operation and a bigger team for my second project, which went much smoother. Though I will say, and our GC and co-development group that we work with is phenomenal, but I do have to fight a little bit more for design choices that I think are important. And sometimes I'll get a little bit steamrolled based on budget things. And I've learned there's a balance there, right? And I really do need to push back on certain things, because if I don't, there will be elements that come out that I didn't push back on that I super regret. And there's a couple things of those at Onera Wimberley, for example, like the pool fence. I absolutely hate it. It looks like prison bars. Yes, it's to code, but I think there's other things that we could have done, albeit more expensive, that would have been much better. But back to who to hire, who to work with, someone that's done it before, I think is the answer. And I will say that building in Texas and unincorporated counties definitely made it easier than if I was trying to do this in other areas. Not to say that it's like wild, wild west and you could do whatever you want. I think that there's a misnomer when it comes to that in Texas. There still are regulations. It is correct that you don't need to get building permits from the city if you're in the county, and there isn't actually building permits, but you still have to have a site plan approved. You have to comply with International Fire Code, IFC regulations, International Building Code. You still have to, get a septic wastewater permit. You still have to, the big one is actually water. If you're more than 15 connections, effectively 15 units, then you need what's called a public water supply, and to build your water system to those specs. And that is very expensive and time consuming. And water is the biggest issue in the Texas Hill Country and most of the state. So it's good that they kind of make you jump through those hoops, because water conservation is important. But that is really how they stem and try to control development in a lot of Texas.
I have a couple unique builds myself around Texas, and water and septic were by far the two. Septic for sure was like the biggest thing the counties had issues with, of making sure you have it planned out ahead, which, obviously you did a great job of planning, and even opened up a second site, which we will get into shortly. But with your first, with the Fredericksburg build, what were you seeing just as a generic average cost to build some of these units? And then what has been some of the, average daily rate and occupancy or revenue you're seeing in that cash on cash return or return on your investment in the earlier units you did?
The OUTEARN Fredericksburg Phase 1, we definitely bootstrapped a bit. I think we probably did it cheaper than I would or could ever do again. for a variety of reasons. And some of that's like now I think build with better quality, more longevity and durability in mind. But even then it was about $300 to $500 a unit. So not cheap. I mean, when you look at the per square foot cost, you're over $1,000 a square foot. We were elevating things 20 feet in the air with a hot tub, up there, with the deck, right? I mean, there's things that we're doing that really increase the cost exponentially with these units. Cladding them all in very expensive but beautiful thermally modified wood, right? Things like that really add to the aesthetic and to the Instagrammability, but definitely add cost. So that was the rough cost. I think our average revenue per unit is about 160,000, but we have units that do over 200, and our margins are over 50%. So we're doing, call it somewhere around 80,000 per year per unit, and some units are doing as much as 100,000 in income.
What do you think besides, and we'll touch this as well at the end about the Instagrammability or, social media, like frenzy that you basically have created with this, but what besides that do you think has, set you apart with getting such a high average daily rate in revenue for such a small unit compared to, other places across Texas? What do you think separates you there?
I think the modern traveler wants a highly shareable, unique one-of-one experience. And I think we're providing that to them, right? There's only one Monarch, at least today. There was only one Spyglass, at least in the Hill Country. Now we've built a few more over at Wimberley down the road. But that property has very unique, unbelievable views, right? Our new location. The modern traveler is looking for these moments of perfection, memories, that they can also share with their communities, whether that's on social or just, privately with friends. There's so much value in that today. And so I think that staying at a property like OUTEARN, a unit like Monarch, Spyglass, the Cocoon tent, these one-of-a-kind stays, there's just so much social capital that you get from doing that. And just like your own being able to unplug and get inspired and connect with a loved one, connect with nature. So I think it just provides a ton of value that like a tired old cabin doesn't.
This obviously started to take off like a little bit of a whirlwind, I'm sure, for you. I'm sure you projected it, but it's always hard to guess how popular things are going to actually be. When did you realize it was like, all right, we need to find more land and probably, expand some? Or was that always your plan? Or how did that kind of process roll with you?
I guess I had a lot of conviction around this because we bought our second piece of property before we opened our first. So
wow, I did not know that. That's a fun fact.
That is some swings. But I also figured, worst case, you could sell the land, right? It's not that big of a risk. But we were pretty all in from the beginning, even before we opened. And then we're just validated as soon as we even threw up listings on Airbnb, before we were even starting to go direct and use Instagram and all the things that like added even more value to OUTEARN. So yeah, when we opened on Airbnb, we opened to $500 to $600 ADR, occupancies in the high 80s, some units over 90%. Granted, this was during like peak COVID euphoria for outdoor travel. So I think some of that was inflated. And we've been able to maintain similar numbers, I think largely on the back of our social media marketing and direct bookings, and increase our margins in some ways.
As much as I've seen the units over online, I can definitely attest that y'all have hit the Instagram reel button exactly how y'all should, because and it seems like every single day I have a different content creator going out there or a different one that y'all might have worked with. Do you associate a lot of these bookings from word of mouth, content creators coming out, a mix of different things? Or what do because I get a lot of backlash when I tell people like, oh, use content creators if you have a place that will suffice in the content they're making. Like, what is your thoughts about content creators and that, like, how it's kind of transitioned over time?
Yeah, look, I think that they definitely have value, right? That's how I got started, was purely with, what I'll call travel influencers. You could also call them travel creators that were local. So local, Central Texas, their audience was all here. That's what matters to us because our property is a drive-to destination. Like, there's very few folks flying in to stay at OUTEARN, at least today. It's really Texas Triangle. So I need influencers that is their audience. They are a Texas travel influencer. So there was a handful of those. One in particular, Texas Explorer, that I worked with first. And she actually hit me up on Airbnb before I was even really hip to the Instagram game. She came out, did a collab post. We did like $30,000 in direct bookings on 2 posts that was basically free. I mean, she didn't even charge us, and we now pay her because we know how valuable she is. So we pay her, thousands of dollars per post and per collab. But that really turned me on to this world of Instagram, driving bookings direct, and working with influencers. So the rest of that year, I would ask for referrals. We would field inbound on the newly created Instagram account that we had. And we did about 30% directs in that first year just through influencer marketing. So it's significant, right? With that being the only strategy. In year 2, really decided to double down on the strategy. And we wanted to start creating our own content and putting that out there, because I basically was posting a handful of pictures, right? Like, single photo posts, carousels. I was not posting our own video. We were just relying on content creators for the video. So we tried to hire an agency, and that didn't go so hot. We were pretty underwhelmed. Just really came to find out that content was largely an afterthought, which is surprising how typical that is in the agency world, where they kind of rely on you for the content as the owner, or they're sending out kind of a mid to lower level employee once a quarter, even with an iPhone maybe at the low end, to grab some content. And it's just not good enough content to move the needle. Certainly not to go viral, but not even to get like halfway decent engagement. So we saw that pretty early on. Our growth plateaued quite a bit. We were getting very minimal engagement on the profile. And so me and my co-founder at the time we basically decided to take the leap and build out our own team in-house that then became OASI, my social media and really like all services for experiential stays, whether that is big resorts or landscape hotels or more like glamping or short-term rental communities. So we ended up building out effectively an agency by owners for owners, because we know what owners want. And that is more than just vanity metrics. It's more than just like having an account up and running. It's driving bookings direct, which we were able to do really successfully, and really building an engaged community that will book with you direct. So through that strategy, through building out that team, testing a ton of different things, and, putting out hundreds of high quality reels, we kind of cracked the code on it, and we figured out how to drive about 80% of our bookings direct through social media, through Instagram. And we're not discounting on our direct booking site. We're actually pricing the same as we do on Airbnb. So we're scooping 14% margin. On some of the other OTAs, it might be as much as 20 to 30% margin. So it's very impactful. And we find that the Instagram user is less price sensitive than the OTA user. So our ADR is higher direct than it is on the OTAs because they're booking higher demand days and they're less price sensitive.
You mentioned crack the code. You don't got to give me the whole Da Vinci code, because obviously what were a couple steps that you saw like, hey, we see this type of content working much better, or what were a couple of those levers you pulled?
Yeah, so we had really one content format that cracked the code initially, and we kind of hammered that for a long time. Now we've diversified into a number of different styles of content that have virality and engagement. But the first one, we had to have really high quality video footage. So, invest in the top videographers. We had one that came full-time on the team, get that amazing footage. One early unlock for us was up front and center in the first clip and in the thumbnail, call out your target audience. So when somebody sees that reel in their feed, they know it's for them or not, right? So if it's a romantic stay, treehouse stay, then say couples getaway, right? With this inspiring kind of hero shot of the treehouse that'll stop the scroll. So if you have this dope shot of a treehouse in this like majestic romantic forest or with this amazing view, you say couples getaway, and then you say Fredericksburg, Texas, or, hour and a half from Austin, or a few hours from Houston, or whatever it is, that will indicate to the audience, oh, this could be for me if I'm in the Texas Triangle, right? I might actually watch through the video. And so it gives you longer watch time. It's more likely that you would reshare it, which are the things that create virality. Nice.
That's a great tip for anybody listening. I'm hoping they're paying attention to somebody that has definitely cracked the code, because I've seen it in action. So Fredericksburg I did not know the fact, I've read your story a few times. I didn't know that you had even went ahead with Wimberley before Fredericksburg was even fully open. And I read recently too that you sold a piece of it to a REIT, a public REIT, and that helped you navigate opening Wimberley, but you also had some troubles between some permitting and maybe some financing issues when you were opening the Wimberley site. So can you walk through maybe some things you learned through that? And then, how exactly you even started that whole process? Because, a lot of people seem daunted by even thinking about building up as something as big as you did, but then also being able to make it into an actual commercial real estate play as opposed to just a one-off, glamping site that they have to run forever on their own.
We took about a year to get the deal done with Summit, the REIT that bought a 90% interest in Fredericksburg and did help us to finance through debt, actually, with an option to buy the Wimberley property, which proved pivotal during the debt crisis when we lost our debt financing. The bank we were with, hit allocation and they had to pull their approval. We ended up taking 4 to 5 months to identify a new bank, and then another couple months of documentation and legal trying to get the REIT and the mezzanine debt, the junior debt that they were providing, to marry up with the senior debt, the local community bank that we worked with for the financing. So yeah, it was very stressful, obviously, very far into the project from a planning perspective, and then having to basically reset in terms of how we were going to actually finance and capitalize the whole thing. So that was just a test in grit and perseverance, and we're going to figure out a way one way or the other. But in terms of attracting interest from the REIT, it was a personal connection. We knew the incoming CFO, so we had lunch with them. We kind of started the conversation with them. But again, it took a year. And they were looking at a few other potential acquisition opportunities and platform plays, which is, I think, what they look at Onera as. They were looking at a few of them in this sort of, mid to late 2021. And they had a mandate from their board to get into alternative hospitality, alternatives to their traditional, actually select service hotels. So Onera represented a alternative to that. And our numbers were just very compelling to them, right? We had super high margins, very high rates, high occupancy, and there was this roadmap for immediate growth. We owned the property next door to Onera Fredericksburg that we are expanding now, which you may have seen some units that I'm teasing.
Seen a couple. Yep.
Yeah, which are going to be unbelievable, that we're opening in June. And we already owned the Wimberley property as well. So there was built in, going from $7 million asset, which is, basically what they paid for it, and getting that to a $14 million expansion. So tripling the size of Fredericksburg, and then another, asset in the mid to high 20 millions for Wimberley.
How nervous were you that Wimberley wasn't going to come to fruition with things going on, or you were always confident in everything, your numbers and everything, that you knew the play was going to be there for someone that was smart enough to take it on?
Oh man, there's definitely dark days. There still is, right? Trying to stabilize an asset. Our debt service number is 135, 140 grand a month. So, that's a hefty number to hit, right? So yeah, there's certainly sleepless nights. I think you do everything you can and kind of, do what you can to impact the outcome, constantly try to get smarter, get better, find areas where you can add incremental value. One of the things that I've found with Wimberley that we're still learning is, for a property with 28 units, how important group sales becomes. Midweek occupancy, getting the masterminds out there, getting the boutique events. And by the way, I think Onera Wimberley is one of the best venues I've ever been to for those types of events. But it's like, how do we get the word out? And we've been working with LinkedIn creators. We actually have a group of 14 travel agents from Travelmation coming to Onera Wimberley today that I'm going to hop out to right after this to, kind of hang out with them, give them a tour, do some dinner with them. And then on Tuesday, we're going to go out to Fredericksburg and I'll tour them there. And all of that came through a LinkedIn creator, Aaron Colson, that I met just through my personal brand efforts. We kind of connected. He ended up coming down, checked the property out, loved it. We talked quite a bit. He wanted to bring more of his, fellow agents out, and we organized this retreat. So I'm trying to come up with creative ways to get the word out there and, show the potential of Onera properties for these kind of boutique event organizers, because I've done events there, right? Like, I hosted the Unique Stays Summit, which was all of the sort of top up and coming innovators in this landscape resort experiential travel niche. And it was phenomenal. I mean, we all left just like on a high of how amazing that event was. So that's a big piece that we're still learning. We are experimenting with ads. So we've never done paid ads before. It's been an instrumental strategy for Onera Wimberley with the unit count that we have. We have a big leg up when it comes to ads because we have phenomenal creative. So because we have the creative already and it's already proven, right? We've had reels that have hit millions of views organically. We can then repurpose that creative into an ad and it becomes a very high performing, hyper efficient ad on Meta.
Nice. Yeah, I was going to ask if I just personally assumed you already have been running paid ads since the beginning. So that's even more impressive.
We were all organic until this past fall.
Wow. Are you seeing more push through Meta ads, Google ads? Is there any that's particularly moving the needle, or it's still a big experimental phase at the moment for you?
It's a big experimental phase, man. I mean, honestly, like getting truth with revenue attribution is like one of the nightmares that I hope I wake up from one day. It's just like all the platforms are trying to take credit, right, for all the revenue, as are any outside agency we've worked with. It's always like whack-a-mole trying to figure out the issues with revenue attribution. We've gone to super, you might think like archaic tactics to get better attribution specifically for organic social media. So we had this crazy thing where all we were doing for 2.5, 3 years was organic social, but GA4, our Google Analytics dashboard, was saying that like 1 or 2% of our revenue is coming from organic social. Like it just didn't make sense, right? And we had it audited, like something just didn't add up. Our public investor, the REIT is like, well, it's not showing the revenue. And we're like, we know it's working. I mean, our direct bookings are way up, everything's up, like something's wrong with attribution and with the tracking. So we ended up implementing a survey right after people book. And it just said, how did you hear about us? And we have a really high opt-in rate, like over 50%. And 60% of those people say they heard about us from Instagram. But Google Analytics is saying 1 or 2%. So there's a big mismatch there. And it's something that we're constantly trying to get better at. But part of it is just the behavior of using social and Instagram, right? Like you'll see it, maybe you'll follow, you'll remember the name, and then you just go and Google it. So it shows up as branded search.
In the sales world, attribution to where something came from, because that's exactly what we even talk about here at Bigger Pockets. Like people will see a brand and they may not instantly click it wherever they're at, but they're going to go Google it at some point. So where do you even think of that source coming from? So yeah, no, trust me, that is a worldwide phenomenon that I think all sales people are trying to figure out at the same time.
Yeah, sales and marketing people. Yeah, it's a bear.
Extremely valuable information. I'm sure you could talk for hours about this whole space because you have obviously crafted, some of the most unique things and have continuously pushed the boundaries there. And you already just touched on a few things that, you're seeing in the hospitality space. But is there anything else in the future that you're kind of maybe leaning into a little more, or anything you're doing different, or you pretty much think, besides, obviously we're always trying to evolve in this space, but at the same time, like if it isn't broke, don't fix it. So what are you thinking in the next few years is going to be, experiential hospitality, biggest new forefront coming forward?
I really try to push the envelope with every new development and project that we're doing. It needs to continue to have the wow factor for me. And that's always been a really good gut check for me. If it has the wow factor for me, then it typically has had the wow factor for a broader audience and for broader consumers. That's one aspect to it. I like to be creating things that are truly one of a kind, maybe not even in the state, but in the country, if not the world. So the couple of projects I'm working on now are actually new brands. So it's not under Onera because it's a really different concept. And they're also more amenitized. They're more wellness focused. I think that's a massive trend. I mean, I've just seen it in myself over the past 1 to 2 years, like how much more focused on wellness I am now than I was even like 2-3 years ago. And you're seeing that trend massively in travel and tourism. We're leaning into wellness amenities. We're leaning into, sort of farm to table and agritourism and all these different things that people care about today. It's really a different concept because Onera is it's like staff light, very minimal service, whereas we're still trying to be very efficient about staffing at these new concepts. But there will be this more of a feeling of like, oh, I could just go and stay there than there is at Onera because we're going to have some sort of F&B offerings on site, even more experiences, more, wellness offerings like a gym, sauna, cold plunge, maybe even sort of beyond those things. We're kind of experimenting with those ideas now. But one of the Concepts is in South Florida. So it's a tropical landscape resort. Think like Bali, Costa Rica vibes, but stateside. And it's this existing exotic fruit farm. So it's 25 acres, and we're going to turn part of it into this jungle vibes destination with these like individual bungalows tucked in basically. So that, to my knowledge, does not exist in the US. Why not? I couldn't tell you. There's only a couple markets where you could do it. One is South Florida, one is certain parts of California. Yeah, we want to be the first to create that. And the second is on this one-of-a-kind piece of property in Page, Arizona, that is by Lake Powell, Navajo Nation, Antelope Canyon. It's like 20 minutes from Amangiri. The project is actually with one of the original developers of Amangiri, and we're creating this world-class ultra luxury landscape resort with one of a kind spa and wellness club, and I can kind of go on and on about that one, but it will be a landscape resort the likes of which has not been seen before, anything like it. So yeah, that's kind of what I'm trying to push towards. I think other areas that are ripe for disruption are urban experiential. I think that city hotels are lagging behind, and there's a lot of room to up the game for hotels in cities. I think just even committing further to content. I mean, I've explored this idea of like, what if in our marketing budget we just have a full-time content team, like multiple people on site, not only during like pre-open and construction and post-open, but ongoing. And that content team can provide content and do shoots with guests as a value add experience to them, as well as constantly be shooting our own content with staff, the landscape, obviously the hotel and the amenities. So that's something that we've been kind of kicking around as well.
I'm definitely thrilled to see everything coming along. I actually just named Page, Arizona, probably a month or two ago, one of my favorite markets for, I think in the $800,000, $1 million budget range too. So I'm glad to hear that I was, I have been definitely appreciative of the acknowledgement there, because now I feel like I'm smarter than I'm supposed to be. So appreciate that. And I can't wait to see it. If everybody else wants to follow along and dive into more of your unique knowledge, where can they follow you at and find more about the projects you're working on?
Catch me on LinkedIn. I post on there pretty frequently. We put a lot of educational content out. Ben Wolff, 2 Fs. On Twitter, I'm at Unique Stays Guy. Instagram, I am Ben Wolff, again, 2 Fs. And yeah, you should join my newsletter. We put out longer form, more robust educational content through that platform. And yeah, feel free to hit me up in the DMs if you want to connect.
Awesome. And we will link everything in the description below. We appreciate Ben for coming on and sharing his wealth of knowledge today. And definitely check out all of his projects he has coming and has already launched. And everybody that has tuned in all the way to the end of the video, we appreciate y'all's time. See you on the next episode.